Deflating the GDP balloon. If you notice in this graph, the nominal GDP increased every year between 1991 and 2001. Part of the increase reflects increased production and part of it reflects rising price. You can think of GDP as a balloon. This is blown up by growing production and rising prices. So, as we said earlier, that nominal GDP also increased because price rise. Okay? So, in this figure, the GDP deflator lets the inflation air contribution of rising price out of the nominal GDP balloon so that we can see what has happened to the real GDP. Okay, the small red balloon in 1991 shows real GDP in that year. Okay, while the blue balloon shows the nominal GDP in 2001, and the red balloon for 2001 shows real GDP for that year. So this one shows the nominal GDP and the red balloon shows the real GDP. Now, to see the real GDP in 2001, we used the GDP deflator to deflate the nominal GDP with the inflation air removed. So we can see by how much real GDP grew from 1991 to 2001. So as we discussed earlier, we use the GDP deflator to let the air out of the nominal GDP balloon and reveal real GDP. This figure shows GDP for selected Arab countries. In x-axis we have different countries and in y-axis we have GDP. Okay, if you notice that Saudi Arabia and UAE and Egypt have the highest GDP in the region, while Bahrain seems to have the lowest GDP in the region. Okay, however, that does not mean that Bahrain is relatively less wealthy than Egypt. We are going to look at the concept of GDP per capita. Okay, in this graph, we have GDP per capita. Again, in x-axis, we have different countries, and in y-axis, we have GDP per capita. So, income per capita reflects an individual's average share of country's GDP. Okay, so if you want to compare GDP per capita between countries, you will notice that Bahrain has a higher GDP per capita comparing to Egypt, okay? Which means that the person in Bahrain is wealthier than a person in Egypt. GDP per capita is a good representation of a country's standard of living and describes how much citizens benefit from their country's economy. Now remember, real GDP per capita is most accurate measure to compare between different countries. It is also the most accurate measure we have in economics for the standard of living in a country. And the formula is real GDP per capita equal to real GDP divided by the total population in a country. Okay, so real GDP per capita is a measurement of total economic output of a country divided by the number of people. And remember, it's used to compare the standard of living between countries and over time. GDP and social welfare. GDP is essentially an indicator of aggregate economic activity. In addition to that, it is also frequently used to describe the social welfare. However, there are several limitations of GDP as a welfare indicator. The first limitation is that society is better off when crime decreases. However, a decrease in crime is not reflected in GDP. So crime is a major part of every society, and having less crime in our society has positive impact, right? And it increased the social welfare. However, as we said, one of the limitations that crime is not reflected in the GDP. The second limitation is an increase in leisure is an increase in social welfare. But again, it's not counted in GDP. So leisure increase the standard of living condition, right? But GDP does not account for leisure time. And the third limitation is that non-market and household activities are not counted in GDP, even though they amount to real production. So as a result, it does not account for domestic and voluntary work, even though these activities have a considerable positive impact on social welfare. The fourth limitation is that GDP accounting rules do not adjust for production that pollutes the environment. So GDP only covers the costs that could be exchanged and valued in the market. These environment costs, like the environmental disruption and pollution, usually cannot be valued in the market, right? So they are not calculated by the GDP. The fifth limitation is that GDP has nothing to say about the distribution of output. Redistributive income policies have no direct impact on GDP. Okay, so if there is a high degree of inequality when it comes to income distribution, the majority of people do not really benefit from an increased economic output. Why? Because they can't afford to buy most of the goods and services, right? So to accurately describe the social welfare, it is essential to consider the income distribution. Okay, and the last point is that GDP is neutral to the kind of goods an economy produce. So what people could get from GDP is just a number of value added in a given time, right? So it only reflects the number changes of the output of an economy or the quantitative growth of economy. The quality of the output and the economy cannot be answered by this indicator. The underground economy. The underground economy is part of an economy in which transactions take place and which income is generated. So there is transaction and there is income generated from this activity, okay? But it is unreported and therefore not counted in the GDP. So the underground economy includes activities such as, for example, criminal activities, selling of drugs on the street or tax avoidance. So for example, selling of drugs on the street, there is transaction happened and there is income, right? But since it's illegal, it will not be counted in our GDP calculation. MC question. Which of the following is included in GDP? A. The sale of stock and bond. B. The sale of used goods. C. The sale of service such as a visit to a doctor. D. All of the above are correct. So the answer is C. The sale of service such as a visit to a doctor. The sale of stocks and bonds. These type of transaction considered a paper transactions, okay? And we said earlier that paper transactions are excluded from GDP calculation. B. The sale of used goods, okay? This is used. We said that only new goods and services going to be included in GDP calculation. So the answer is C. If you buy a burger and fries at your favorite fast food restaurant, A. Neither GDP nor consumption spending will be affected because you would have eaten at home if you hadn't eaten at the restaurant. B. GDP will be higher, but the consumption spending will be unchanged. C. GDP will be unchanged, but consumption spending will be higher. So it is the other way around. And C. Both GDP and consumption spending will be higher. The answer is D. Okay, so if you are a customer or individual who wants to buy a burger and fries, you are consuming, so it has an impact on the consumption expenditure because you are consuming these products. And since consumption expenditure is one component of GDP. You remember the GDP four components. Consumption expenditure is one component of GDP. So ultimately, an increase in consumption expenditure will lead to an increase in the total GDP, right? So both GDP and consumption spending will be higher. Which of the following statements about GDP is accurate? A. Nominal GDP values production at current price, while real GDP values production at constant price. B. Nominal GDP values production at constant price, while real GDP value production at current price. So it's the other way around. C. Nominal GDP values production at market price, while real GDP values production at the cost of resources used in the production. And D. Nominal GDP consistently underestimate the value of production, while real GDP consistently overestimate the value of production. So the answer is A. Nominal GDP value production at the current price. So whenever we calculate the nominal GDP, we are using the current price for the current period, while real GDP values production at constant price. So it's based on the base year price. In a country, GDP consists of dates and fish. In this question, we have two products, dates and fish. In 2002, 50 units of dates are sold at $20 per unit. So the total expenditure on dates equal to $1,000. Okay, so 50 units multiplied by 20. So this is the total expenditure of dates in 2002. And 100 units of fish are sold at $10 per unit. So the total expenditure on fish is also $1,000. Okay, 100 units multiplied by $10. Okay. Now, if the price of dates was $10 per unit and the price of fish was $15 per unit in 2001, so these are the prices in 2001. The base year when nominal 2002 GDP is. So in this question, the base year is 2001. Okay. And the question is to calculate nominal and real GDP. Okay, the answer is A. The nominal GDP in 2002 equals to $2,000 since it's measured in current price. So basically it's 1,000 worth of dates plus 1,000 worth of fish, so equal to 2,000. So this is our nominal GDP in 2002. Okay, since it's measured at the current price. Now the the real GDP use the price from the base year, and in this case we are going to use the $10 for the price of dates. Okay, and the price for the price of fish, the $10 for the price of dates and $15 for the price of fish, and multiply it by the output of 2002, which is in this case 50 units of dates and 100 units of fish. Okay. So the total real GDP in 2002 is $2,000. So $500. So 50 multiplied by 10 equals to $500 worth of dates, and $100 100 units multiplied by $15 per unit for the fish. So total of 2,000. So the answer is A. Both real GDP and nominal GDP equals to 2,000. When economists talk about growth in the economy, they measure the total growth with A. Absolute change in nominal GDP, B. Percentage change in real GDP, C. Absolute change in real GDP, D. Percentage change in nominal GDP. The answer is B. Percentage change in real GDP. So economic growth is measured as the annual percentage changes of real GDP. Okay. So it is as a percentage, measured at percentage change in real GDP. The final question is Ali builds a newly constructed home for 200,000 BD in 2016. He sells the house in 2017 for $225,000 BD. Okay. Now the answer is D. The 2017 sale does not increase 2017 GDP, and 2016 GDP is increased by 200,000. Okay. So it has no impact on 2017 GDP because if you remember that GDP private investment expenditure includes only the sale of newly produced housing, which means that the sale of an existing home by its owner is not counted to avoid the double counting. Okay, so it already was measured in 2016 GDP, so it has no impact on 2017 GDP.